Hello, everybody. Welcome to Tax Lien webinar session number 3. I'm your host, Erin Bates. Thanks so much for joining us here again today. To quickly recap what we've gone over here thus far on our first 2 sessions. On our first webinar session, we went over everything to do with tax lien basics, okay? And we focused heavily on the state of Florida because that's where we have a major lot of our investments. However, we spoke also on our second class about the general process and sort of the differences, of how investing in a judicial state compares to investing in an administrative state as well. But today what we're going to go over is what I feel is exceptionally important. That's going to be your research and also your due diligence that needs to be done on each and every lien before you actually proceed with the purchase. Okay, because obviously the more knowledgeable we are about our investment and the more informed we are about our investment, the better off we're going to be on the back end. Okay, so exceptionally important. So bear with me just one moment here. I'm going to unshare the video and share my computer screen with you guys, and we're going to dive on in. So bear with me just one moment here. Okay, let me bring this up. Okay, you guys should be able to see my computer screen here again. Welcome. This is everything to do with research and also due diligence and what all is entailed for us as tax lien investors. So what we want to take a look here today at, what we want to look today on the agenda, you guys, is basically what all is entailed with due diligence as tax lien investors, right? If we're simply looking at something as a real estate investment opposed to a tax lien investment, we're going to get in the own way of what we're looking to ultimately do. Okay, and also we want to take a look at the differences of the assessed value of the property opposed to the market value of the property. Okay, and for those of you that might not know, when the county comes by and they assess your property, that's what's going to dictate your property taxes will be based off of the assessed value. Okay, whereas you're not going to sell your home for the assessed value, you would always sell it for the current estimated market value. Okay, so that's what all the comparable properties or homes are selling for in that area at this given time. So exceptionally important to know in case you do end up acquiring that property. Okay, also we're going to be speaking of the HLTV ratio, and what that stands for is the horizon lien to value. If you take out the word horizon, it's a whole lot easier to remember lien to value ratio, but what we want to go in and take a look at here to decipher this ratio is the full total amount of lien that is owed against the property, and then we're going to divide that by the assessed value of the property. That's what's going to give us what is called the HLTV ratio. Okay, and lastly, we're also going to speak about the differences of doing due diligence on tax deeds. Okay, because if you're buying a tax deed outright, you're actually purchasing the land or you're purchasing the home that's on that land. So if you're buying a deed, the due diligence process will be a little bit different than if you're just simply going in and doing the due diligence on a tax lien. Okay, so we're going to elaborate on all of this in the slides to come here. So what is due diligence? Basically, it's understanding the property values. It also is going to include researching that area. Okay, things like crime rate, for instance. You'd want to make sure that wherever it is that you're investing is not in a big, serious, heavy crime area. Of course, every area is going to have a little bit of crime, but you want to make sure that you're not deep in the heart of it, because ultimately that could impact your investment, not only the market value, but if you do have, say, a rental opportunity, you don't want to pigeonhole yourself of who it is that you're going to be renting to. Okay, also calling the county, that's going to be a major tool for you guys. Please always make sure that you're reaching out to those counties for any type of assistance. They're exceptionally friendly people. For whatever reason, sometimes people are a little intimidated to call the county. You're going to notice that when you call them, try to get on a first name basis. They're exceptionally friendly people. And as I mentioned, we'll be able to go in and do a ton of due diligence through different websites, the tax collector websites, the property appraiser websites, things like Trulia or Realtor.com or Redfin or Zillow, whatever it is that you guys are comfortable with. But as far as calling the county, they have an entire vault full of information there. So of course they can dig in and see every single thing that's gone on with that particular property. So I definitely want for you guys to get in the habit of picking up the phone and giving them a call. Okay, but it's exceptionally important as well to know the total investment amount, right? You want to know what your all in amount is going to be on that particular property. Okay, and when we're speaking of that HLTV ratio, if we see that that ratio shows beneath 90%, it's starting to get unlikely that you are going to end up acquiring the property, and most likely you're going to get redeemed with the interest. Okay, so when we know how much the investment is opposed to that assessed value, that's going to play a vital part for us here as tax lien investors. Okay, and lastly, we also want to know what can we do if we end up acquiring the property. Okay, because you want to know what that total investment amount is before you purchase it, because you want to be able to see that if you did acquire the property, that obviously the value of the property is substantially higher, so you'll be able to make the profit that way. Either that, or you want to look at the area, because to be the most lucrative in any type of investment like that is obviously to add development onto that piece of property and increase the value of it. Okay, so whether you're holding it to turn around and sell it, or you're holding it for a rental opportunity, or if you're turning it into your very own turnkey opportunity, all of the above, you'd want to make sure to do all of the due diligence in all of those areas. Okay, so when we're taking a look at due diligence, there's always going to be 4 things that we want to check for. The first, as I mentioned, is the value of the property. And to me, that seems pretty common sense, right? We want to make sure that the value of the property is there. But that's going to include the property address and also the location, as I mentioned. Okay, so when you're taking a look at stuff like this, if you'd like, you can go on to, say, for instance, Trulia, and it's going to give you a crime rate tab. And down at the very bottom, it will give you the actual addresses of all the properties and the distance from the property that you're looking at of when it sold, and also the price that it sold for. Okay, so if you see that there's a lot of sales activity taking place in that area, you would know that if you did end up acquiring the property, you're going to be able to unload it very quickly on the back end, depending on the price that you list it for. Okay, so that's going to have a major factor as far as the actual location. But for those of you that are looking for rental opportunities, personally, what I would be looking for location is this property somewhere conveniently located next to a hospital or next to a medical facility with all the interns that would consistently need to rent. Also, you'd want to take a look at a university or college perhaps. Okay, because of course there's always going to be students that need to rent as well. It puts you in a really, really great spot if you're looking to have a rental location. Okay, also the total outstanding amount of liens, as I mentioned, that is going to be a big factor here, because that would be the full total amount that you would end up acquiring the property for, is the total amount of lien that is owed against the property. Okay, and lastly, the other certificate holders on the property. So you guys, only one idle investor can go active per property, and it's whoever it is that does it first is who will maximize their rate of return at that 18% annual interest on your all amount that is invested. Okay, so whoever does that first, that's who will actively go after the property and trigger the 18% annual interest, whereas all the other certificate holders, they're going to get paid out as idle investors. Okay, now objectively, you're always going to want to go active on the property by filing the TDA, but sometimes if you don't have the money to buy out all the back taxes, this is now where we're forced to stay idle for that given period of time until we do have the money. Okay, so if you're planning on just staying as an idle investor, pardon me, the biggest reason of importance here to know the certificate holders that are beneath you is basically each one of those years of certificates would represent an additional year of insurance. Those investors did not just buy their certificates to allow them to expire. Okay, so remember, you have to file the tax deed application on the property before the lien itself expires, or you will throw out the redemptive value that you purchased it for. Okay, so if you see that there's a bunch of certificate holders that are beneath yours, each one of those years of certificates would represent another year worth of insurance for you as an idle investor. Okay, so also when we're looking at the assessed value of the property, remember an assessed value is the dollar value assigned to a property to measure applicable taxes. This is going to be that first number that we need to calculate that HLTV ratio. Okay, there's two numbers. It really doesn't matter which number you collect first, but the two numbers that we will need are the full total lien amount that is owed against the property, then divided by the assessed value of the property. That's what's going to give us that HLTV ratio. Okay, now as I mentioned, 90% or under is kind of that golden number that we're looking for, because if it was sitting at 90% or lower, that would mean that it's very unlikely that you're going to acquire the property, and most likely you're going to accrue the interest. Okay, and accruing interest and being redeemed with interest, that's a fabulous thing. Okay, but say for instance, if you see that that HLTV ratio starts to show under that 90%, like 60 or 40 or 30 or something like that, the lower that that ratio shows, it would mean the less likelihood you have of acquiring that property. There's very, very little lien that would be owed against the property compared to the value of the property. So if you think about it like this, if you go to force the foreclosure on the property and the lien amount is very little, when the property owner is faced with the foreclosure, most likely they would pay off. But if they do not, this is still where the property will go to the tax deed auction. And remember, the lien amount plus those two fees, the tax deed application filing fee and your auction filing fee, plus the 18% annual interest that is accrued to that date, that will be the minimum bid that they start the property at. So when those investors also see that that HLTV ratio is very low, that is where they will start to outbid each other very quickly. And of course, all it's going to take is one bidder to outbid your bid. That's how you're going to get redeemed. Whereas they're going to go on and continue to outbid for the actual deed of the property, and whoever pays the most is who's going to take the property. Okay, and you guys, whatever the actual value of whatever the property sells for at a tax deed auction, that will not impact you whatsoever as the investor. Okay, now also when we're taking a look at that market value, the highest estimated price that a buyer would pay and a seller would accept for an item in an open and competitive market. So this is what we were mentioning of market value. What's going on in and around your particular area of investment? Are there a bunch of foreclosures that are currently taking place? This is something, again, you can always be reaching out to any type of real estate agent in that area to see what kind of assistance that they'll give you. But they're very informed about their local area. So they should have a really good idea of if it would be a good investment or potentially a different area would be preferred. Okay, so make sure that you're knowing the differences between your assessed value and also your market value, but the HLTV ratio will be based off of the assessed value. Okay, so also you guys, the horizon lien to value, as we mentioned, it's a guideline used to obtain data through very, very basic research, right? So there we are again, there is your full property taxes or the assessed value, or divided by the assessed value, pardon me. Some people will say total property taxes is a total roll-up amount. Okay, and that's what we'll be calling it here at the company, is your full total roll-up or subsequent delinquent taxes divided by the assessed value. That is going to give you what's called your HLTV ratio. Okay, so to give you an example of this, when we go into a tax collector website, where we're going to be going is to what's called a taxes search system. If you can see, that's right above that parcel ID number. Now, most of the 67 counties at this point have implemented into the same software program. However, not all of them have. I'll always recommend first and foremost to any of my clients to type in the actual county's tax collector website. Okay, if you see that that taxes, that TAXSYS is sitting anywhere in there, that's where you would know where you need to click on to start your due diligence. Okay, and the reason for that is if you can see below there, it's going to provide you with those three tabs: parcel details, full bill history, and also the property appraiser tab. Those are going to be our direct links to gather that bit of information. So if you see that it is linked into this taxes search system, I kind of consider it a one-stop shop. It's going to be very, very user-friendly to be able to go in and navigate our way through to see what it is that we need to see that's going to pertain to us here as tax lien investors. Okay, now this is just an example. We're going to see that some of this information is outdated, but what you can see directly beneath that parcel ID number is the latest account information. that there is the property owner's business name, and beneath that would be the property owner's business address. So you can see that they're in Claremont, Florida. Okay, and you can also see the real estate. It gives us the actual physical address, but please don't always assume that that's the address sitting right there. It's those account details, the parcel detail tab, the full bill history, and the property appraiser link. That's where we're going to be clicking on to gather all of the accurate data. Okay, but over on the furthest right-hand side, if you can see that there's a green bubble sitting there and it says pay 7 bills, $37,399.67. Okay, that amount that you see in that green bubble is the full total amount of taxes that are currently owed today. Okay, so if you were to buy this lien and you wanted to push forward with the foreclosure, that would be your full total all-in amount that you would be expected to pay. Okay, so as you can see, this is a property in Port St. Lucie, Florida. It has a 2011 tax lien certificate that was available to purchase. The redemptive value to purchase just 1 year worth of taxes is going to be $6,784.03. Okay, so this is where we search for the property record on the county tax collector's website to gather additional information. Now, if you see that the parcel has 7 bills overdue, what is the total amount of roll-up? Well, obviously, it's that full bill that you see. That will be 7 years. And you guys, because the state of Florida has a shelf life or an expiration on their certificate that is 7 years, more common than not, we are going to expect to see that there's exactly 7 years worth of certificates that are sitting there. Okay, so when you first make your investment, you are purchasing just 1 year worth of back taxes, and that's the given moment that you are considered an idle investor. Okay, so remember that 4 to 6 weeks later, this is where we now want to file the tax deed application, but that is the given moment that you would have to buy out the remaining balance of all those back taxes. Okay, so if we see that the HLTV is greater than 90%, remember this is going to indicate a higher probability of acquisition. Okay, lower than 90%, very unlikely chance that you're going to acquire the property, and most likely you will be redeemed. Whereas if it's up over 90%, it will be a higher chance of acquiring that property. It means that the lien amount is 90% of what the value of that property is. Okay, so if you are truly looking to acquire properties, potentially looking at a higher HLTV ratio would benefit you better. Okay, so let's also take a look here. So when we clicked on the assessed or the property appraiser link there, that's where it took us directly here to the assessed value of the property. So you can see right there, I know it's very small, you guys, but it shows to be $22,660. Okay, so when we're calculating what that HLTV percentage is, remember it's your full total roll-up amount divided by what we see here, which is that assessed value. Okay, and we're going to see what that equals in just a moment. But before we do, when you click on the property appraiser link, there's a couple bits of vital information that it's going to provide us with as well. But the land size, for instance, you can see that that's 0.24 of an acre, or that's 10,324 square feet. It's also going to indicate your parcel ID number. This is where you're going to be able to see the legal description of the property as well. Always go in and try to click on the map if there's one provided, so you can go in and see the property lines of the property as well. Okay, very important at this age that we can see the actual physical property lines. Now, when we've done the math here, there's your full amount of taxes divided by the assessed value. That's going to equal 165% HLTV. Okay, so when we see what is called an upside down HLTV, that would mean that there's more lien that is owed against the property than what the assessed value property shows, or the assessed value of the property shows, should I say. Okay, so if we see something that is up over that 90% or even up over that 100%, this should be somewhat of an immediate red flag. Okay, however, you guys, we're not going to discredit a lien just because it'll be up over that 90 or up over that 100%, because typically these can be the little diamonds that are in the rough. Okay, but what we want to do here is that if we see that the HLTV again is that high, that's where we're going to discredit the assessed value, and do much further due diligence on the actual market value of the property. Because if you were to see something that had a very, very high HLTV, remember you have a much higher chance of acquiring that property. And we don't want it to be an upside down investment where the lien amount just simply exceeds the value of the property, right? And sometimes people will, again, they will purchase it right around that same dollar amount simply because they're planning on developing on the property. So that's where they're going to add the value there to make the profit on that end. Okay, but if we see something like this, again, this is where we're going to evaluate it just a little bit further, because when we're taking a look at the visual here, or the aerial view, again, this doesn't show us the actual property lines on this particular picture, but what it does show is this neighborhood. And I think we can all agree here that this little neighborhood, this is a very, very nice neighborhood. Beautiful homes, they're great big homes, in fact. But that property right there, you guys, I also see that it's backed up to basically like a state preservation. So nobody will ever build behind them. That gives a nice sense of privacy on there as well. So if the HLTV ratio does not fit the criteria, we will not necessarily pass on the lien, as I mentioned, okay? Because this is where you want to do that further due diligence. You'd want to Google the site address. You're going to find the view of the parcel. And this is where you'd want to ask yourself, does this vacant residential lot look like something that a buyer would want? Absolutely, a beautiful area. I wouldn't mind making friends with my neighbors. Okay, so, but do you guys think it could possibly be a little under assessed at only 24,600? They've obviously switched that. It went up. It was 22,660 at one point. It's gone up to 24,600. But of course, this property looks to be under assessed. Okay, so something to keep in mind is that when the market crashed back in 2008, it brought all of those assessed values plummeting down. Okay, but they can't just increase to whatever it is that the market is currently doing, because there's a cap rate that they can only increase by 0.3% per year. So the reality of that is it will take forever and a day for the assessed value to reflect what is currently taking place with the market. And so that's why we want to dive in and take a look to see what the actual market value is, because that could potentially be what's throwing off that HLTV completely. Okay, the other thing is that the property owners in the state of Florida, they do have the right to fight the county if the county comes by and they reassess their property and say that they increase the assessment. If property owners are not happy with that because now their property taxes have increased, they do have the right to attest the county, and more often than not, when they do, they will win, which means that the assessed value, it might be exactly what it was, say, 10 years ago, because the property owner keeps fighting it. Okay, so again, you could see how that's going to throw that HLTV ratio completely upside down. Okay, so please keep in mind, these are the types of opportunities that advanced tax lien investors search for. The HLTV will scare away the novice investor, which makes it that much more valuable to us. So as I mentioned, you guys, typically these would be the ones that I'll gravitate towards, because most investors are scared of them, which means we just need to dive in a little bit further to make sure that the actual market value is where it is that we need it to be. Okay, now when you're doing your tax deed due diligence, there's a few things that we're going to do a little differently than when we're just doing our due diligence on a lien, because you're actually buying the tax deed outright. Okay, so you'd want to first and foremost find out if there are any other liens that are owed on the property. That could entail any type of nuisance lien, things like that. So again, usually you're going to see that sort of stuff on the actual county websites, but get in the habit of picking up the phone and giving them a call. Because if you do acquire the property, in order for them to transfer ownership, first and foremost, all of those liens would have to be paid off. Okay, so we'd want to factor in, if there are some liens sitting in there, we'd want to make sure to factor those in. Okay, the second thing is getting that property record, right? We want to make sure that the property record looks good, that there's no type of red flags or anything that it is that we need to be made aware of for any type of future development or anything like that. But doing that title search, as we mentioned, that's going to be a big part when you're purchasing a tax deed outright. You want to make sure that it comes with a clean, quiet title, because again, you just don't want to run the risk of anybody coming back and having a discrepancy on who actually owns that property. Okay, so if it gives you a little peace at night, that's exactly what it is that you'd want to do, is make sure to reach out to one of those title search companies. And if you recall, on our last webinar, we provided you with some of that information. So we also want to take a look at the GIS map. That stands for Geographical Information Systems. Some people will call it Google Images Satellite. But the GIS map, you guys, usually that will be located on the tax collector website, and that'll link you directly into the property appraiser. The GIS map is going to provide you with the actual property lines, okay? And if for whatever reason at this day and age you cannot see the actual physical property lines through the county website, that would be a major red flag, okay? Because you should always, always be able to see that. Now, the importance of that is obviously, say for instance, on the aerial view, you could potentially see that there's a home that goes through both property lines, something like that. Well, is it the same property owner that potentially owns the property beside it? Okay, or if you're taking a look at the map and suddenly you realize that the property itself is landlocked. Okay, and what landlocked means is basically there's no easement or there's no point of access to access that piece of property. So if you did end up acquiring it, what do you do now? How do you actually get to that property? Okay, and that ultimately can impact the market value of the property substantially. So make sure always that you're taking a look at the GIS map. I would take it one step further as well. Exit out of the GIS map, take the actual physical address or locate a residence with a physical address right beside it, and bring that up on your Google Maps. So then that way you can zoom out without any type of gridding getting in your visual. And you can see every single thing that's going on in and around that area and what type of development is coming in. So knowing the location of your property compared to any of that development, that's only going to benefit you as well. So by doing so, when you're doing this, we want to get the market value and also the neighborhood information, right? What's going on in those particular areas right now that are driving their economy or increasing those market values. If any of you have liens in Charlotte County or interested in liens in Charlotte County, currently there's a major multi-million-dollar projects that are being established, and that's all driving their economy and those market prices to come up. Okay, so find out what's going on in and around those particular areas. But lastly, you would want to find out about any type of possible environmental issues. Now, this isn't really something that you're going to run into very frequently, especially here in the secondary market. But say, for instance, you are purchasing in the primary market in the state of California. Okay, so California has a lot of different laws and environmental laws that make it very, very difficult to invest. But you guys, you'd want to make sure, for instance, if there was ever any type of oil leak or something like that, perhaps they would make you remove soil and how many feet would have to be removed. Things like that would be, just something that if you can avoid, by all means, we want to take those measures. Something that you could potentially have is, say, like an animal that is relocated onto your property, and let's say it's on the brink of extinction. Well, that animal is going to have some rights where we'd want to have it relocated off of the property before you would be able to take acquisition of the property. So those could be potential environmental issues, but again, by contacting the county just to find out if there's anything like that in that particular area that you would want to know about ahead of time, that's something, again, that you should make sure to find out if there's any type of environmental issues that will impact your investment. Okay, now when you're doing the extra steps for those tax deeds, remember, first and foremost, you want to identify the owner or owners of the property and search each owner's public records. Okay, this is ultimately very time consuming, and it's one of the reasons why we can't do it for each and every lien. But remember, you can also do that stuff yourself by paying to have that done. One thing that you can also do, if you do feel comfortable, I would definitely advise having this done for you, especially for the first few investments that you go through. But if you start to get a little bit more comfortable with reading all of that information off of those websites, this is where you can contact the county recorder's office directly, and they'll kind of assist you by saying, okay, log into here, click on this button, now to go over here. Okay, but one of the biggest things that I find with those websites is that a lot of that can be attorney's handwriting, right? And it's kind of like medical shorthand. So if you're not understanding exactly what it is that you're reading, please, please, please make sure that you take the extra measure and go about hiring that services to do that for you. Okay, because again, in some counties you can search online for the owner's records, but you just want to make sure that you are reading the vital parts of what's going to pertain to you as the actual tax lien investor. Okay, now lastly, the county clerk's office, you can use Google to find contact information, but when you guys are reaching out to these county workers, what you want to basically ask them is, where can I find a property owner's public record? Also, where do I go to find code violations or government liens that are going to remain on the property when I buy the tax deed? Okay, so as I mentioned, these are very, very friendly people. So make sure that you have them on your power team. You're always going to want to expand all of your contacts. The more people you have in your corner, the better it is that you're going to be. But also keep in mind, if there was ever something that may potentially be on that particular property, they may be able to perhaps delete that, or maybe they can negotiate with you or anything like that if there's any additional fees. It's always worth asking. You just never know. So keep all of this stuff in mind here, you guys. I know it's a lot, but this is everything that you are going to want to do as far as due diligence on any property that you're going in and taking a look at. So please, please make sure that you take the proper measures and the right steps to do your due diligence. Again, if you're doing due diligence on a tax lien, it's going to be a little different opposed to your tax deed. So if you're buying those properties outright, make sure that you do take that extra step to make sure that that title is clear. But I just wanted to say thank you guys very much for joining me here again for our webinar number 3. We still have one more to go, and so I hope to see you guys soon. Thanks again for joining. See you then. Bye-bye.